A slowdown in the economy always affects the housing market. Usually, price growth slows, making it easier for some to buy.
Completely. It is very pockets in Johannesburg. You have pockets. You have it at the coast. We've all been reading how the coast is booming. Everything's happening, and you got foreign investors, and everything is hot, going very fast at the coast, which is fine. Regional areas are quite different. Johannesburg in particular, and then Northcliffe within Johannesburg are very particular. So we don't necessarily, there's a lot of stock on the market, but that gives you as a buyer quite a plethora, quite a number of choices that you have in buying units.
However, property is not a short-term investment, and those who believe they are going to make a quick profit after a short period will have to re-evaluate their decision to buy. Buying a home is an expensive exercise and includes all sorts of costs, including transfer fees and conveyancing costs.
As a first-time buyer, the first advice, the best advice I can give them, be aware of your homeowner's cost. A 1 million bond is going to cost you 10,000, so if you rent it out for 7,000, 8,000, plus your cost, you're looking at 3,000 to 4,000 of cost that you will be having to put in extra. Don't forget, we also have your rates, you also have your extra and additional costs that come above your bond. So a lot of people they might overextend themselves initially getting into a property and then realize, oops, there actually comes more to it cost-wise on a monthly basis than I thought. So you rather not push yourself to the limit cost-wise, have a little bit of flex, get the property, see what actually after 1 year worth of renting it out and of cost, where do you stand, and then you take a decision going forward.
Here are some of the current trends around the property market in and around Johannesburg.
Well, Johannesburg has always been the, as we know, economic hub of sub-Saharan Africa. And consequently, the rentals are always in high demand in this area. People are attracted to the area primarily for jobs and work. And very often they would prefer to rent initially before they commit to buying. That's the one reason. And the other reason is very often they're not South African and they need to familiarize themselves with the areas, prices in the area, and in order to raise bonds, which take time.
As for other trends in the industry that are relevant, the most contentious one is that property owners could be held liable for historic debt incurred by previous owners dating back up to 30 years.
Well, we know that the precedent has been set, but of course, let's see if the next court is going to overturn the decision. I think the public outcry should be enormous, and hopefully that will protect a lot of us homeowners. But for those wanting to go into the market and buying a new property, maybe they need to add an extra clause into their contract stating that, listen, you as a seller are pretty much indemnifying myself, and all debts all have been paid for, and if anything were to happen, you will take care of those, and I'll take care of the new debt going forward. Whether the seller will accept such a deep and blank check type of answer, it's a different issue.
The reality is, if this new precedent law is left unchallenged by industry experts, legal experts, and even ordinary South Africans, there could end up being serious negative ramifications for the lucrative property market in South Africa in the form of lower investor confidence and appetite. The other issue is that of integrity on the part of municipal officers and municipal leadership, because it could end up being very problematic for new homeowners to verify the authenticity of historical debt. Nashina Mohammed for Joburg Today.